Today we are going to be talking about the CARES Act, which was passed by Congress at the end of March here on March 27th, I believe. And I've asked John Bever to join me so he could fill us in on what we've been looking at in the CARES Act and how it's going to affect you as an individual in terms of those provisions. So thanks so much for taking the time today, John. Really appreciate it.
Certainly. This is what we do to help our clients.
Great. So maybe we could start off. Could you just tell us kind of a little bit about this CARES Act and how it's just an overview of how it's going to affect individuals?
So the CARES Act was passed in order to provide some very quick funding, putting money into the hands of Americans because of the significant job losses and time loss due to the coronavirus. So there are provisions that affect the filing of taxes. There are provisions that affect the contributions to retirement accounts and HSAs. There's also some provisions in there for paid time off. And what most people are looking for is that stimulus payment, which is a tax credit.
Well, let's start there. Why don't you tell us who actually is going to be eligible to receive that tax payment and how much is it going to be?
So that tax credit is going to go to individuals and families. For individuals, it's going to be based on their adjusted gross income on their tax return from 2018 being under $75,000. Over $75,000, there's going to be a phase out. For joint returns, that's $150,000, and there's an additional payment that will go for each family member that would qualify. This would be a child who is handled as a dependent on the tax return.
Another question, John. How much is the amount of these payments that individuals can receive if they qualify?
It is $1,200 per single filer, $2,400 per joint filer, plus $500 for each qualifying child. And that is a dependent child under the age of 17. And again, there is a phase out. The phase out starts after $75,000 of adjusted gross income for a single filer and $150,000 for a joint filer.
Excellent. So I still don't get anything for my older teenagers who are still around the house now or back from college.
Or those that came back from college and are around the house now, eating you out of house and home.
That's right. Bummer.
Yeah.
So how does this work, John? Can someone who's retired and no longer working still qualify for these same payments?
Yes. So this is really to every taxpayer out there, whether you owe taxes or not, whether you actually have earned income or not, whether you're working or not. So retirees are also going to be receiving this payment.
Let me ask you a follow-up question, John, for those who are retired. So they still qualify, but what if they don't even file the tax return typically? How does it work for them?
Yeah, that's a really good question because a lot of people are wondering about that. This is going to be linked up with the Social Security Administration. So the easy link is that if you are receiving a Social Security check, but you don't have to file because your income isn't high enough, you will still be receiving one of these checks in the mail.
And when should we expect those checks, John, if we qualify?
So if you have filed electronically and you have the ACH link between the bank and the IRS to receive your refunds directly into your bank account, you should be receiving that payment really within the next couple of weeks. It will be automatically deposited into your bank account. If you work on snail mail and paper, it'll take quite a bit longer because they'll have to process those individually. So it could take several months before those individuals and families see their payment. Great,
thank you. And so, though this probably isn't the case for most people, we've certainly seen some express this concern. But what if someone doesn't want that money, John?
Well, you can't really refuse it. It is going to show up, and so you're going to receive this amount. But there are several things that people can do with this money if they really don't want it and they don't need it. The first thing is you could put it in the bank account in case things get worse. That's one possibility. But another thing you can do is actually use this to help the people around you. So I've already heard of several creative ways that people are planning on using this refund that they're not going to need. Some people are going to be donating to their local food pantries. Some people are going to be donating to their local church or synagogue for the benevolence fund. I also think it's a creative idea to potentially hire somebody around the house. So if you need some work that's done, perhaps windows need to be cleaned, or the gutters never got cleaned after the fall, certainly hiring some people to help around the house would be a very good use of this money for those that have lost time and have lost work. I heard yesterday about a plumber that lost his job because there just isn't enough work coming in at the present time. Housekeepers would also be a good use for people that may not be employed as they normally would be, because people do not want others coming into their home. Well, if you feel confident having someone come into your home to do some house cleaning, that would be a way of being able to use this money in a practical way.
Oh, those are some great ideas. Thank you. What, when we get this money, John, do we have to pay it back?
No. So this is one of the questions about qualification. So if you qualify based on your 2018 tax return, but you don't qualify based on your 2020 tax return when you actually file, do you have to pay that money back? And the answer is no. So receiving the money is based on a previous year's tax return, but looking at what happens this year is going to be based on the 2020 tax return. Vice versa, let's say that you didn't qualify based on the previous year's tax return, but you would qualify based on your 2020 tax return because you lost some pay. You will be able to receive that refund of the tax credit when you file your 2020 tax returns at the beginning of 2021. So you'll have to wait for that money if you're in that situation.
Gotcha. Okay. But at least it will come if that is your situation.
Correct.
Could you tell us, because there's some items in here that affect IRA withdrawals because of the bill. Could you tell us a little bit about that, John?
Yes. So the first thing is there's a waiver of the penalty for early withdrawal out of your IRA. There's also a delay on the required minimum distribution. So if you are age 72 or older, those are the new rules under the Secure Act, age 72 or older, you do not have to take your required minimum distribution for 2020 if you don't want to. You're certainly able to, but you don't have to take it if you don't want to. If it would not be advisable from a tax standpoint, you don't have to take that. And for those that are in that little transition that already turned 70 and a half when the Secure Act was passed, and you do have to take your RMD this year, lucky you, 2020 is a pass. You don't have to take that RMD under the CARES Act.
Great. And John, the CARES Act also gives a pass to those who have an inherited IRA, correct?
Yes, it does. So it includes all of those beneficiary IRAs that are out there.
Next question, John. There is some provisions in this CARES Act for people who need some paid time off as a result of the coronavirus, correct?
That is correct. What it does, it extends some of the provisions under the Family Medical Leave Act. So if you yourself are sick and have to miss work because of the coronavirus, or if your doctor says you have to stay home, you can't go to work, or if you're shut in because your state has done a lock-in, or if you have to stay home to care for a family member, which would include taking care of children who are not in school because of the lock-ins, then you qualify for up to 2 weeks of pay at 40 hours per week at your regular rate of pay. This will be paid by your employer, and your employer will be reimbursed by the federal government when they file their payroll tax. The reimbursement rate is 100% if it's for your own medical reasons, and it is 2/3 if it is for the care of your children.
Excellent, excellent. Well, thank you, John. Is there anything else that you feel we need to know in terms of this CARE Act and how it affects us as individuals?
The main thing is be patient. This is moving at lightning speed. To be able to get these payments out, that alone is a monumental task. Add to that all the provisions for businesses and how quickly they're trying to push this money out because of how quickly the economy has stalled means it's a lot of work for systems that weren't designed to do this. So that's the biggest thing, is be patient. The money will arrive eventually.
Great. Hey, thanks so much for your time, John. And certainly if anyone has any questions, they can feel free to give us a call at the office or shoot us an email, and we'd be happy to talk about your situation further. Thanks so much for both of us at Phase 3, and we'll talk to you real soon. Bye-bye.